We're here in Monte Carlo for the Rendezvous de Septembre. For Everest TV, I'm Richard Banks. And I'm joined now by Jill Beggs, who's Reinsurance Chief Operating Officer for Everest Group. Jill, welcome.
It's great to be here, Richard.
So, Jill, Everest has a positive outlook on the global reinsurance segment. What's your assessment of the challenges and opportunities facing reinsurers?
Well, I would say we agree that we have a very positive outlook for reinsurance globally. We are in a elevated risk environment, however, so we know we have geopolitical tensions around the globe. We have elections worldwide going on, economic and social inflation. So all of this contributes to the environment that we're in. But we do think it becomes a beneficiary for a flight to quality in the reinsurance market. So if you look at property and where we are, we're starting the year off with an active first half. So we've seen $61 billion of catastrophe losses in the first half of the year. From an economic perspective, we have 32 events that are over $1 billion in the first half. And as you know, are the earliest Cat 5 hurricane in the Atlantic this year with Hurricane Pearl. So that all contributes to an elevated risk environment in the property space. So we expect to see continued demand there and attachment points, pricing, terms and conditions holding.
As you say, a positive outlook there. How sustainable are those conditions?
If you look at the majority of the property market worldwide, that is sustainable because there's such a demand coming. We've talked to clients. They've already indicated to us that they will be topping up their program, buying additional capacity because of the outlook for property. There are some areas of the globe that are challenged. We've had secondary peril events around the world, whether it's flood in Brazil, flood in Dubai, hailstorms in Italy. So we expect that terms and conditions will adjust in those areas as well. But we think property is certainly sustainable.
Property sustainable. What about casualty? Lots of questions about the casualty market.
Yes. Casualty is another question, and it's a different answer whether you're looking internationally or within the U.S. So in the U.S., we're certainly seeing elevated loss trends. They are driven by social inflation, litigation financing companies, legal system abuse. We're seeing that it's an industry-wide problem. And we do, as a reaction to that, do believe that ceding commissions need to come down so there's better alignment between insurers and reinsurers. And we've cut back quite a bit in the casualty space over the past year, and we'll see how terms and conditions play out. But we do think for the market to be sustainable, we need to see rates on the primary side continue to increase, and for ceding commissions to come down for more of an alignment of interest.
So you talk about the difference between the international and the US, the North American casualty. Can you expand a bit on that?
Internationally, we don't see the same impacts of social inflation. Not that the international markets are immune from social inflation, but we see the active plaintiffs' bars and litigation financing funding coming into the US, which is really driving a different scenario in the US versus worldwide. That being said, it's not all doom and gloom. So we do have a positive outlook. And it's an ever-evolving market, and we feel we have the strength to meet the market at the moment that we're in.
Jill, thank you very much indeed.
Thank you, Richard.
For Everest TV, I'm Richard Banks.